Well, it was quite the non-correlated market day here in the United States. On the one hand, we see the Dow Jones continuing to make a nice move higher. It was up 0.5% today to new all-time highs on the backs of some good news from Intel. We also saw some positive price action out of Boeing here recently. But on the flip side, we're seeing the smaller cap universe, the Russell 2000, actually struggling here. We were down 0.5% on that Russell 2000 today, and it continues to have a strongly bearish posture. In the middle, we've got, of course, the S&P 500 and the NASDAQ that are kind of going back and forth depending on the day on whether it wants to be bullish or bearish. We did see Amazon come out with some news today that it's raising some of its minimum wage levels a little bit higher here today, so that had people talking there. We also saw commodities start to perk up just a little bit, and we saw some positive price action out of a corner of the world that needs it, Brazil. We haven't seen a lot to be happy about down in Brazil recently, but today we got it. And so our trade application today is actually going to focus on combining what I mentioned before with one of those positive Dow names with the country of Brazil. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 2nd, 2018. First of all, welcome aboard if you're new to these videos. We're grateful to have you in our audience. Remember, you can subscribe to our channel over on YouTube, and while you're there, check out our description area where you can also sign up for our daily emails that will not only remind you whenever these videos are posted, but will also give you a heads up on what stocks are giving you overbought and oversold cluster signals in the S&P 500. We're also heavy users of Twitter. My handle is @BrandonVanZee. Feel free to follow me. In addition to that, we would sure appreciate it if you guys click like and retweet on any of the tweets that we have that revolve around the Market Outlook video. It's just a quick heads up that you appreciate the effort that goes into recording this every day. And then we're also on Facebook, so join our group there. All right, let's go ahead and dive into the analysis of the market now. As you can see, I've got chart 4B pulled up in front of us. For those of you that are Market Scholars subscribers, you can kind of follow along with your charting package at home. I should also mention real briefly that because of the huge change that took place over the weekend with the telecom sector being converted into the communication sector, I did redo a number of these charts as well. If you are a premium subscriber, you should have received an email from me within the last day or two, so make sure you're checking your inbox with all of the updated shared chart links. Well, this one is chart 4B, and as a reminder, this is just a 4-grid here where we're looking at the 4 major US-based equity indexes here. And each one of these charts is 3 months in length. When you're looking at the background color of the chart, that is describing whether that particular index has a bullish intermediate posture or a bearish intermediate posture using the market forecast indicator, which you can find over at Thinkorswim or TD Ameritrade. And so as we look at this and kind of start breaking this down, first of all, notice that the S&P 500 was essentially flat here today. It was down 0.04%. But it was enough of a negative move where we flipped back to a weekly bearish posture. So we've been kind of going back and forth depending on the day here recently as the market tries to figure out what direction it wants to go. We've had more days than not, of course, be bullish during the last 3 months, but 2 out of the last 3 days, we've seen bearish posture. So we'll have to see if that leads to anything more substantial. Right now, we continue to have price above a rising moving average, so I'm not overly concerned at this juncture, but it is something to keep your eye on, particularly since the bottom right-hand corner chart is looking at the Russell 2000. Now remember, the Russell 1000 and the Russell 2000 are two completely different things. The Russell 3000, so Russell is the organizer of the index, and so they have the 3,000 most important or largest companies in the United States. They kind of sliver that into 2 different pieces. They have the Russell 1000, which are the 1,000 biggest companies, and then they have the Russell 2000, which will be the bottom half, or the bottom 2/3 in this case, of the smaller companies on the index. Those represent the small cap. So the Russell 1000 is the mega cap and big cap companies, large cap companies. Russell 2000 specifically hones in on those mom and pop operators, and that's where we're starting to see the significant stress within the marketplace. We're not seeing that within the mega cap operators yet. As you can see up above here, the Dow Jones is doing just fine, thank you. It's up to all-time highs as of today. So we don't have any problem in the mega cap world. We do have a problem down below here in the small cap world. notice that it seems like day after day after day, this thing continues to bleed lower and lower and lower. You'll even notice that the background color of the chart has changed to this darker shade of pink here. Now, when that occurs, that would be known as a strongly bearish posture. Remember, when we get that lighter pink color, that's just a weakly bearish posture. But we've actually seen enough stress, enough selling pressure here where we have a strongly bearish posture. Now, that occurs when we have this green intermediate line on the market forecast cross below 50 to the downside. And that's what we've seen here in recent days with the Russell 2000. Meanwhile, like I mentioned before with the Dow Jones, this is a darker shade of green here. Notice that there's a lighter shade of green back here when we have a weakly bullish posture. Well, this is a strongly bullish posture. So that's what, again, makes this market a little bit suspicious right now. It's not normal when we have this type of behavior where we have a strongly bullish posture on the mega caps and we have a strongly bearish posture on the small caps. But that's why they play the game. That's why they open the market every day. And so that's where we have to kind of dictate from a day-to-day perspective what we want to do with our next trade. So right now, if you're looking for bullish opportunities, perhaps the mega caps offer more opportunities. And on the downside, if you want to be bearish in this market, then the Russell 2000 has shown you that it wants to be a laggard at this current juncture. So just keep your eye on that. As I mentioned before, Russell 2000 was down 1% today. That's a pretty aggressive day right there. Remember that these ATR labels that we have on this particular chart setup are designed to change color whenever we have a big range day versus a small range day. When you see the color be orange, like it is here with the Russell 2000 and also with the Dow Jones, that means that we had an outsized range day. Now, just because the range was big doesn't dictate whether we have a down day or an up day. And this is a perfect example of that. We had a big range day for the Dow Jones, and the Dow Jones was up today. We had a big range day for the Russell 2000, and it was down today. On the other hand, notice to the charts to the left here, as we look at the S&P 500 and the NASDAQ, they both have those blue colored labels, not orange in that case. And so that tells us that the range was smaller in those cases. So as it stands, everything said and done, we actually have 3 out of the 4 indices right now with at least a bearish posture. In the case of the Russell 2000, it's a strongly bearish posture. And our lone general to the upside is now the Dow Jones as it retains its bullish posture and hit a new all-time high today. Notice the yearly high label shows up there as well when that occurs for a yearly high. But in the case of the Dow Jones, of course, that's all-time highs as well as a yearly high. All right, let's take a look at some other charts here while we're at it. Let's take a peek in this particular case. Let's go over here to do some 12 grid analysis now. And so in this case, I'm going to come over here to the intermarket analysis 12 grid. And this particular 12 grid will show us kind of 12 different asset classes that are outside the scope of the stock market, and will give us a sense of whether we have a bullish or a bearish posture on them based on the background color of the charts themselves, which derive from whether the intermediate term line on the market forecast indicator would be suggesting bullish or bearishness. So as we look at this, I tend to look for things that are catching my eye, either continuations of trend or key reversals. And really what caught my eye today was the strength in the commodities, as I kind of mentioned in the intro here today. So let's take a peek. Down below here, we have a few commodities that we can take a gander at. Notice that in the lower left-hand corner, first of all, we have the US dollar. And remember, a lot of times the US dollar is what dictates price action within the commodities that are themselves priced in US dollars. And a lot of times when the US dollar is weak, commodities are strong and vice versa. That's what makes today, again, a little bit peculiar. We found that the US dollar, in the form of the UUP, was actually up today. It was up 0.16%. Not a huge win by any means, and we did close near the low of the session, or at least in the lower half of the session, but it was an up day for the dollar. And a lot of times when you see an up day for the dollar, you see a little bit of struggling with the commodities. But take a look at what's going on here. We saw gold actually have a very nice day. Gold was up 1.3% today, and we went from being below that moving average to being above that moving average in today's move. Well, not to be outdone, take a look at what happened with agricultural commodities. DBA here in this particular case was up 1.82%. Notice that huge candle down below there. This was a downtrending chart here that has started to stabilize in recent months, and now looks like it's gonna try to gun for the upside. We'll see if it happens or not. You know, it's failed many times in the past, but this is a promising start to that. That was a very aggressive day. Not only was the candle nice and strong and got it above the moving average like gold, but unlike gold, it actually switched the posture, according to the intermediate term line on the market forecast, to a bullish posture. So notice that green background color there. So keep your eye on the agricultural commodities. We're starting to get something brewing right there. Crude oil actually had a little bit of a setback, but keep in mind we're at multi-year highs right now, or thereabouts. And so it's already made its move. You know, we've been talking about that ad nauseum in these videos where, you know, we've got crude oil with an inverted head and shoulders pattern where we broke out of that. So, you know, it's just kind of stalling out a little bit up here because it's already been leading the ag commodities and the gold commodities in recent weeks. So it kind of had a head start there. And so it's catching its breath a little bit here today. Do note that we did have an overbought cluster signal here on crude oil as well, so perhaps it just got a little bit ahead of its skis here and is stalling out. But you know, clearly it continues to have that bullish posture, and that's why the background color continues to be green. And of course, it remains above a rising moving average as well. So we haven't said this much in recent months and years, but the commodities are actually starting to look somewhat interesting here. Let's keep our eye on that particular trend right there. In fact, let's do this while we're thinking of it. I'm going to come back up here to some other charts. In this case, let me see if I can find it here. Yeah, sector comparison ratio charts. Hang on just a second. I always forget where I tucked this one in. Here it is. It's 4Q. So let's go over here to 4Q. And this is actually one of the charts that I did change over the weekend for those of you that are premium market scholars. The reason I changed this one didn't have anything to do with the sector change. The reason I changed this one is because the chart that was previously holding the number 3 slot on chart 4Q used to be UHT, which was the ETF that tracked the heating oil and diesel space. The fund company or the fund family that put that one together decided to call it a day and folded that one up. There just wasn't enough interest in that particular ETF. So I did switch this one out so we can still keep our eye on heating oil, but in this case it's more of an index, $SPGSHO. So just be aware of that change. Again, check your email if you're a premium market scholars subscriber for the shared links and the information you need for that, and all the changes I made to the watch list and everything as well. All right, so as we're looking at this, the point that I wanted to make was, again, we've got kind of the inkling that there's a potential reversal that's starting to take shape in a lot of those different commodity areas. But remember, not all commodities are created equal either. So as we look at this, I would say that, you know, we're looking at kind of 3 different rungs of information. We've got the energy commodities up top. We've got the metal commodities kind of in the middle rung, and then on that bottom rung there, we've got the agricultural commodities. Now, as we're looking at this, I would still say, you know, the trend remains very favorable for the energy commodities. You look at that top rung there, they all 4 have green background colors, and they're all above a rising moving average. In fact, you look at UNG here, which represents natural gas. That's a very strong breakout there. Heating oil, strong breakout. We also have strong breakout in gasoline. And I guess not to be outdone, oil has a fairly strong breakout as well. So things look pretty good there in the energy patch. Now onto the bottom, or to the middle rung here, as we look at the metals, here it's a little bit of a different shape. Remember that a lot of the metals had been in downtrends. You know, it doesn't happen overnight. Even with the energy ETFs, remember up above here, these were largely going sideways for a while until they broke out to the upside. Now, in the case of the metals, they were largely going down. And so they kind of probably need a little bit of time where they go sideways for a while and then eventually break out to the upside like we're seeing here with the energy space. So as it stands right now, the trends don't look particularly enticing, but we are at least starting to see some semblance of a bottom taking shape in some of these metals players here. In the case of platinum, that's the one that maybe looks a little bit more interesting. That's PPLT in the shape of the ETF there. Notice that we kind of caught a nice bid higher in platinum already. Whereas over here with gold, it was more sideways. And so we've had a little bit of a pullback in platinum in the last 2 weeks, but notice where it bottomed. It bottomed above a rising moving average. That's a promising sign. Now, we're not home free yet, so we don't want to make too much of it. We still have strong resistance at about this area that we're trading right now, but it is a promising sign that it appears like it wants to put in that higher low. You know, in the past, when you got a stock going into a downtrend, you always have lower highs and lower lows. So if we can start, converting a downtrend into an uptrend, oftentimes what you're going to need to see is a higher low at some point. So if this can hold as our higher low, then chances are there might be enough buying pressure here to get us up and over some of these key resistance areas here. So keep your eye on platinum. That seems to be an area that's starting to capture some investor interest. And then down below here, you can see we had a nice breakout in sugar today. It was up 4.5%. We also saw a nice breakout in coffee as well. That thing had been oversold, and then boom, just like that, in about a week's worth of time, we went from being in a strong downtrend to potentially, putting in some sort of a reversal here. So, there's some things brewing. Again, they're not perfect charts, but, they got to start somewhere. And so keep your eyes on them if you're looking for some reversals. All right, let's take a look at a few other 12 grids while we're at it. Let's come back over here and take a look now at the foreign stock market's 12 grids. All right, as we get started here, I wanted to show you here, first of all, we're on chart 4F for those of you following along at home. And I wanted to point out Brazil in particular. I mean, Brazil just took off today based off of some promising price action based off of the elections that they have taking place over there in Brazil right now. Notice that Brazil was up 5.6% today. That's not a misprint. Now, obviously, Brazil's an emerging market, so we do see more wild and volatile price action than we'll see in a big developed market like the United States. But, keep in mind context there. It's not like Brazil is just some small little place. Brazil is a massive, population and could be a very powerful economic force in the decades to come as well. So when you see an entire country's stock market go up by over 5% in a day, you sit back and you take notice of that. So keep your eye on that. Our trade application, as I mentioned before, will kind of tie into that area. But I just wanted you to at first recognize that Brazil is starting to break out of its funk right here. We'll see if it continues or not, but it's at least a good sign that it's no longer in that downtrend that we saw a month or two ago. When we look at some of those other areas, not so much promise. We see China down 2.4% today. We saw India continuing to struggle. It was down 0.5% today, but it's been, getting all those oversold cluster signals there. So you would think that at some point there would be somebody interested in buying it, at least for a week or two, but we're not there yet. It doesn't seem like it wants to budge at this point. Some of the other areas, Mexico was down 1.5% today. But Mexico is still up 10% over the last 3 months, as you can see with this label right here. A lot of that admittedly was in the first few days about 3 months ago. So as those early days start rolling off, we'll start seeing this be less impressive. But right now I would say Mexico's probably stuck in a box, with the top end being right up here where we had a double top back in early August and also end of August. And then the bottom of that box or that rectangle would be where we were in the middle of August, and then again here at the beginning of September. And where we stand right now is basically right smack dab in the middle of those ranges. So, right now that's kind of a directionless market. And of course, it's been in the news a bit more here this week with, some of the things that we've been hearing with the United States, Canada, and Mexico coming together with their trade agreement. You can see, speaking of which, Canada was down today 0.82%. And kind of like Mexico, it's just really been stuck in a sideways range for much of the last couple of months. As we look at some of these other charts, there's not a lot to get excited about here. I mentioned last week, or the last time when I did this video, that you'll want to keep your eye on Australia because I was feeling a little bit bearish about it at that time. Reason being, Australia fell out of bed here, put in this oversold cluster signal, had the reversion to the mean, and then when we looked at it last week during the video, it was rolling over right at that key 30-day moving average. And so I was a little bit fearful that we'd get downside price action based off of that. And indeed, that's exactly what unfolded here today. Australia was down 1.18%. So, be careful there. Looks like it kind of wants to continue that downtrend after having that kind of erratic price action that we've seen here more recently. Let's take a peek at what's going on now in the United States. And so for that, we're going to come on over here to chart 4G. And as a reminder, this is one of the charts that I updated as well, where we got rid of telecom officially and we replaced it with communications, which is XLC, for those of you that want to follow that sector going forward. Remember, XLC is being made of not only the old telecom companies, but also companies like Facebook and Google that were pulled out of technology. And in addition to that, it's also pulling a lot of the media companies like Disney and CBS and even some of the movie theater companies. All those companies were going into the communications space going forward. So a lot of changes there. It was the biggest sector shakeup in history from a market cap perspective. So just be aware of how that could affect some of your trades out there. But anyway, as we look at these various trades or these various charts, again, the same mentality holds true, where if you see a green background color, that means you have a bullish posture using the market forecast intermediate term line. And if you see a pink background, it means you have a bearish posture using, again, the intermediate term line on the market forecast. So as we look at these different charts, I would say that some of the healthier looking ones, first of all, are the two kitty corner from the upper right to the lower left. So up here we've got technology, and remember, technology no longer has Facebook and Google in it. It got pulled out and put into the communications, but everything that remains, including Intel, which I mentioned in the intro, will be part of that technology space. So there you've got your kind of leftover semiconductor companies, your leftover software companies, your leftover hardware companies, but you no longer have the social media and search giants that you once did. Well, right now, FANG has struggled. Even today with Amazon making its news with the hike in the minimum wage, Amazon stock was down today, and it had been really the stalwart within FANG prior to that. Facebook had already started struggling, and so perhaps technology actually gets a little bit of a jolt here going forward because it doesn't contain FANG. How about that? For so much of the past, the reason technology was going up was because of FANG. So kind of interesting to see how the tide has changed or turned a little bit here. But technology remains very strong. And again, healthcare in the lower left-hand corner, that has been a stalwart and remains number one on my sector selector tool as well. The other areas that have a bullish posture are staples and utilities. After this nice violent rally to the upside in utilities that we've seen over the last couple of days after getting those oversold cluster signals that we mentioned last week. But I don't know if I would hang on every last little bit of this trend, because the reality is we're still below that falling moving average right there. So what I'm trying to say is, yes, the market forecast suggests that you have a bullish posture on utilities, but price itself shows kind of a broken chart here. So I don't know if I'd bet the ranch on that. Got to be a little bit careful with those utilities because they do swing around so much with interest rates out there. In addition to those areas, we also have the industrials, which does look more promising. And that was one thing I mentioned last week. For a brief moment, we had the industrials that actually showed a bearish posture, but I said not to read too much into that because we still had price above a rising moving average. Well, here we are a few days later, and we're back to that rising intermediate term line, and therefore we now have a bullish posture again. So that's a good sign to see it stabilize there. Now, the price action wasn't necessarily great. Notice that today's candle, yes, it was up, so we were up 0.23% on the industrials, but we were still on a intraday high basis, we were still lower than yesterday's high. So you don't necessarily think of that as the best bounce. Yes, that was a very good bounce off the moving average on Friday to Monday, but you would have liked to see a little bit of follow through from Monday to Tuesday, and we didn't really get a huge follow through today. But it is promising to see the industrials, which of course is the home of stocks like Boeing, continuing to look moderately strong here. One area of note that is a bit concerning is the discretionary space. That had been a leading area for the market, but you can see that today the discretionary space got walloped. Now, keep in mind here what I mentioned a moment ago, which is we went through a seismic shift in terms of sector shakeup over the weekend. What the result of that means is that the discretionary stock is, or this discretionary sector is actually more concentrated today than it was last week. And where it's concentrated is in Amazon. So just be aware of that, because the discretionary components got smaller because so many of those media companies got taken from discretionary, put into communications. And so what remains of discretionary, all those apparel companies and those retailers, is going to be smaller portion of the whole compared to Amazon, which remains the beast within discretionary. Remember, Amazon was a bit strange from the FANG perspective because it was the only one, well, actually Netflix, I take that back, but Netflix is a very small market cap compared to Amazon, Facebook, and Google. But anyway, Google and Facebook got shook up because they got plucked out of the technology sector and put into the communications. Amazon actually stayed put. And so that made it a little bit rare there. Remember, even Netflix went from discretionary to the communication. So of the FANG stocks, you really found that Amazon was the one that stayed where it was beforehand, and therefore the smaller discretionary sector after these changes kept the biggest component within it, which is Amazon, and therefore Amazon is now more powerful within discretionary than it was even last week. So when you have a day like today when Amazon struggled, then you're going to see it a little bit more so in the discretionary sector. And that's exactly what we're seeing unfold right here. So keep your eye on that, because that's not healthy price action right there. Prior to that, discretionary was doing very well. Remember, there's been a lot of buyout rumors in the media space over the summer. So it's perhaps the media companies that were keeping the discretionary area as strong as it was, they're no longer there. They're now in the communication space. So we want to keep our eye on that story. If all the retailers and the online shopping centers like the Amazons and the eBays of the world start breaking down, then we have some downside potential in the discretionary area. Okay. With that out of the way, let's now have a conversation about the trade application example for the day. So let me come over here to chart 4A for this. Just a regular market forecast chart where we have just a one grid right here. So with this, I'm going to go ahead and pull up ticker symbol ERJ. Now this is a stock that some of you might not be familiar with, quite frankly. Embrar. It's a company that's actually a very strong company in its niche from a worldwide perspective. This is a company that competes in the aerospace and defense segment, and it is a company that is headquartered in Brazil. And so with the breakout that we've seen in Boeing here recently, notice that Boeing, after being kind of the belle of the ball for much of 2017 into early 2018, had been kind of quiet after going just on an epic run prior to that. So just to give you context, remember Boeing, if we look at a 3-year chart here, just was in a raging bull market for that middle chunk right there, and was just setting the world on fire in terms of the market cap that it would tack on day after day after day. It just seemed like Boeing would not go down. Well, eventually we ran into this market kind of stalling out period in January and February of this year, and Boeing really stalled out as well. It went mostly sideways. Now that's good news, because remember, Boeing just went on an epic move right here where its stock, in some cases doubled, in some cases tripled, depending on when you got in. For some of my dividend growth investing classes, we actually got in, and had you put Boeing on a dividend reinvestment program or DRIP program, you would now be up triple. Now that does not happen regularly for companies as large and as influential as Boeing. You see that with smaller cap technology companies. So that was a very rare feat that we saw right there. So it was no surprise that Boeing could not keep up that breakneck pace here. But what was, I guess, promising about it is it didn't break down. It didn't give back those gains. What it did is it merely stalled out, went sideways, and now look, it's starting to bounce again, breaking out over some of those other areas. So Boeing actually represents kind of an interesting bullish trade idea in its own right. But why I'm bringing this up right now is I wanted to tie something into the story of Brazil, which we saw break out to the tune of 5% here today from a whole country perspective. And most Brazilian stocks have actually been left out in the cold when it comes to the market price action that we've seen here more recently. So as we look at ERJ again, remember that ERJ, like most Brazilian companies, has really struggled in the last 6 months. Now, to tie this story together even closer, many of you that are familiar with Embrar know that Boeing has approached them as being a potential takeover candidate, one, or if the Brazilian government won't allow such a thing, at least at a very bare bones minimum, being a steady partner for Boeing. So, those rumors are still floating around, but it does remind you that there are not that many airplane manufacturers on this planet. Embrar down in Brazil is one of the key ones that's out there, and if Airbus and Boeing continue to go at the jugular on one another, then you might find that Embrar could be takeover bait at some point. So, as we're looking at this particular chart here, notice that not only has Boeing started to take off, but so has Embrar. Notice that we've started to get some positive price action all of a sudden after not seeing it for so long. If we zoom back in here to the 3-month time period, you haven't seen a 2-week period like we've just seen out of Embrar on this entire chart right here. And a lot of these downtrending candles here had all these oversold cluster signals as well. So like a lot of times what happens, we had a downtrend that doesn't immediately revert into an uptrend. It takes some time to unwind that negative price action, and how it does that is it goes sideways. So really, since this candle on August 13th to where we were about a week ago, we spent the time just going nowhere, going completely sideways. Well, we're starting to take shape here. All of a sudden, we're trading above a moving average. Not only that, but notice the background color of the chart is now dark green, telling us that we have a strongly bullish posture using the market forecast intermediate term line. Tying that in with the strength of what we've seen in the aerospace and defense area in the United States with Boeing in particular, and the fact that Boeing wants to be a partner of Embrar, and then of course tying in today's news of the strength in the Brazilian overall stock market, then perhaps we have something brewing here. So what I thought we would do today is just do a straight stock trade here, not an options related trade. The options in this one aren't quite as liquid as you can probably imagine compared to Boeing, and so this one might be a better fit for a stock based idea rather than just an options one. So what we'll do here in this case, just to see if this will work out for us, is we'll put our stop loss down below the prior low. If we're making the assumption that this stock is starting to make a move right now, then ideally it's going to hold this low of $17.99 and hopefully leave that in the dust, and the stock takes flight going up, pardon the pun. But if we're going to have a $2 downside stop loss, and that's what we'd have. So recognize this stock is trading right now at $19.98, and so if we put our stop loss just below this candle, that's basically a $2 stop loss that we would have. Well, if we do that, we want to have at least $2 worth of upside action as well. So if we ask ourselves realistically, does this stock have a chance to get to $22, which would be $2 higher than where it's trading right now? That takes us to about right here on the chart. Now notice that's an area that we were just at here about 2.5 months ago. So it wouldn't be unrealistic. Sometimes people throw price targets out there and it seems pretty unrealistic. This one does not strike me as unrealistic. If this actually does take shape and money starts flowing into Brazil again, and stocks like Boeing and the other aerospace companies remain hot, then I think there's a decent chance, obviously it's a coin flip at this point, but a decent chance that it could go up $2 just as equally as it could go down $2. So this will be known as a one cancels one order. So what we do to implement that order on the Thinkorswim Paper Money platform is just right click on the chart, go down here to buy custom with stop. Actually, hang on just a second. I think there's an easier way to do it. I'm going to right click again, go to buy custom with OCO bracket. My apologies. Actually take that top one right there, OCO bracket. There it goes. So down below that loads up our bracket order. That bracket order is comprised of really 3 different pieces, even though it shows 4 different lines. So I'll explain here. We'll just do 100 shares in this, or whatever your position sizing suggests. So that's just the default on this platform. But we'll try to get filled tomorrow at $19.98. So I'm going to type that in as a limit order. Now again, The tricky part about doing these videos after the market is closed, we have no idea where the stock market is going to open tomorrow morning. And if this thing is erupting higher before we get a chance to get in, then we can't really do anything about that. So so be it. But we'll try to get in at the same price where it closed here today at 1998. Now on the second line where it says minus 100 there, that's going to represent the upside buy target objective. And so again, we'll probably try to get about $2 of upside potential there. So let's go up to $21.98. So that's our $2 of upside potential. Now for that one, where it says limit, just to the right of that, it says day. We want to change day to good till cancel. Otherwise, that will get basically canceled the day after it expires. So we want that good till cancel, so that way it's working for us day after day after day. Now on the third line where it says stop, we're also going to change that to good till cancel for the exact same reason. We don't want our stop order canceled after day number 1. And then on the final line here, this fourth line that's associated with the third line, that's where we want our stop loss. And so in this case, we're going to put our stop loss at 17.98. In other words, 1 cent lower than the prior low that we saw over here. So, if it does go down there, we'll throw in the towel and say we were wrong and the stock continue to go into a downtrend. On the other hand, if this starts to take hold here, we have $2 of upside potential with $2 of downside risk. So with that, let's go ahead and click confirm and send. Review that one last time. Everything looks good there. We'll go ahead and send that one in and see if we can get filled on that first thing tomorrow morning. All right, well, I want to thank you for joining me here tonight. It's always a pleasure to go to work for you. Remember, we had some kind of crazy price action today. We saw the small caps really struggling. And then again, we got the mega caps that are continuing to trek to the upside. So we've got a market that doesn't really know how to make up its mind right now. But what we have seen is some life coming into some of the commodities. We saw Brazilian stocks finally start to make some headway to the upside, and some key areas even within the United States like the industrials, technology, and healthcare continuing to shine as well. So keep your eye on some of those areas. Best of success with your trades and your investments. Goodbye for now.